Today is Monday, May 1st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grain markets this morning, Mark, this past year we've talked a lot about Fed policy and how it affects the financial markets, but it also spills into the other markets as well. How does monetary policy impact the funds in the agricultural space?
For months now, I've been illustrating in my Commitment of Traders report the inverse relationship between interest rates and the index funds positioning in the ag markets. When rates effectively went to zero during COVID lockdowns in the spring of 2020, assets began pouring into commodity index funds as a hedge against inflation. As rates stayed historically low, coupled with government stimulus, inflationary pressures continued to build in the U.S. economy, resulting in index funds positioning peaking in the spring of 2022. Now, over the past 13 months, as the Fed has finally begun to aggressively raise interest rates to combat inflation, index funds have been aggressively paring back positions in the ag space, nearly back to the lows we saw in the spring of 2020, just ahead of COVID. If the Fed's tightening program is indeed done after this week's presumed increase, and the outlook for rates is lower into the second half of the year, I'd expect index funds to start pouring money back into the ag space, much like we saw the last Fed easing cycle from August of 2019 through April of 2020.
Mark, it's hard to believe we're already in the month of May. What factors will drive agricultural prices this week?
Well, there's no USDA reports this week, so U.S. weather, as usual, will play a dominant role in price discovery. Temperatures are expected to warm considerably from west to east starting the early part of this week, while rainfall is expected to be below normal, which should enable planting progress to stay ahead of its historical averages. We have a crush report this afternoon that could possibly show the largest amount of beans crushed ever in a single month. The markets will also monitor last-ditch efforts to keep the Black Sea grain corridor open beyond the current May 18th deadline. But I think probably the most important factor this week in ag markets is going to be the Brazilian corn and soybean basis levels. Cash prices in Brazil have fallen dramatically here in recent weeks under the weight of their record production and harvest in tight storage. As a result, U.S. export demand has suffered. We expect lower export numbers from the USDA in next week's WASDE report. With Brazil's soybean harvest now nearing completion and their second corn harvest about 90 to 120 days away, I'd expect some recovery in this basis, and that would have a positive impact on U.S. prices as well.
Lastly, Mark, what's your read for this afternoon's crop progress report?
Well, I think you're going to see corn plantings advance about 10 to 12% this week, up to that 24, 26% range, keeping in line with the historical average, but well ahead of the year-ago pace. And soybean plantings there likely advance in that 15 to 17% range, also above its historical average. I look for winter wheat ratings to improve. Probably in the range of 2 to 4% and good excellent following the rains last week in the southern plains. But look for spring wheat plantings to still stay historically slow, probably under that 10%, in the 8 to 10% range up in the northern plains.
Alan, here we are again, a couple of days before the FOMC meeting.
Right.
This Wednesday, May 3rd. What will the Fed do?
So it seems very, very likely that the Fed will hike by another 25 basis points. And that would take their Fed funds rate at 5 to 5.25. So this is the fastest rate hiking cycle in 40 years. And the Fed began hiking rates from near zero in March of 2022. So once we have this rate hike, we will probably see several meetings of no change in policy. But then there's pressure at the end of the year for the Fed to actually start cutting rates. Keep in mind that no one at the Fed, at least as far as I have seen or heard, is indicating any type of easing later this year. But the financial futures markets are very much suggesting that the Fed will be under quite a bit of pressure later this year to reverse this tightening.
We'll see what happens then. And Alan, outside of the Fed meeting, what other major economic reports are scheduled for this week?
So, of course, it's the Fed meeting that is a primary focus, but Tuesday we'll have March factory orders guessed at up 1.3%. Wednesday, the April PMI Services Index guessed at 53.7. The April Institute for Supply Management Services at 51.7. That's also Wednesday. Then on Friday, we'll have April non-farm payrolls guessed at a 178,000 increase.
And Alan, just briefly here, near-term outlook on the stock index futures and the U.S. dollar?
So stock index futures have held up remarkably well in spite of all of this Fed tightening since late last year, in fact, the fourth quarter of last year. Right now, we do have a double top in the S&P at the 4198 level. And I think that will be taken out maybe even before the Fed meeting. Of course, it's not that far from where we are right now. So probably higher for the indices over the near term. As far as the currencies, I think the dollar index will probably continue to decline overall, although it's a little bit higher currently today. And the euro currency will probably continue to advance. Keep in mind, with the Fed likely to raise rates one more time, the European Central Bank could be raising rates 2 or 3 more times. So from an interest rate differential point of view, that suggests the euro will advance and the U.S. dollar will decline.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.